Greetings, everybody, and thank you for being here. Thank you for being on my channel and watching this video. This video is going to be super awesome, and I'm sharing with you guys something that is almost making Forex like cheating. With this indicator, you have the ability to check your analysis and check if your strategy is actually working because this new indicator, well, actually, it's not new. I just found it, so it's new for me. I'm pretty sure there's other indicators like it that probably cost a fortune. So I'm super surprised that this indicator is still free and still available. So I definitely recommend you guys download this video. And at the end of this video, I'm going to show you guys where to find it and how to install it to your Metatrader 4. And this is super awesome, and you guys are going to love this. All right, so one of the challenges that we have as traders is being able to see what is inside the candles. So we see these huge engulfing candles, but we don't always know what they mean. And depending on what strategy you have, especially during these conditions, the conditions have been very choppy across the board with all currency pairs, and it's been super complicated on how to find good trades. But once you know what is inside the candles, then you can really see all the real buyers and all the real sellers, and you should know what direction you should be trading. Now, when it comes to the retail trading side, you don't necessarily want to follow retail traders because the system is designed for us to fail. But the Forex market is designed for banks and institutional traders to be successful. So the buyers and sellers that you see in this data window are the real buyers and sellers that are actually moving the market. And these are the people that you want to be on the right side with. All right, so let's get into it. All right, so we're going to be looking at a few currency pairs today. So let's go ahead and start with the one that's the most popular. Let's start with gold. Now, the cool thing about this indicator as well is on the settings, you can have all time frames enabled. So you can see pretty much, the short term, the midterm, and long-term trends. So when I trade, I always factor this in now because if there's any funky stuff going on the charts that doesn't make any sense, then this is going to tell me exactly why. All right. And the cool thing is you don't have to scroll through a bunch of different time frames all the time because you can see all the time frames right here. So real quick on the indicator, the bars on the bottom represents bearish if you see red bars, and it's the green bars mean the trend is bullish. So I don't put too much grain of thought in the bars because as you can kind of see, they're always changing. But they do provide a nice visual. But what you really want to use this indicator for is this information right here. So let's look at gold for a second. All right. So, you know, for the most part, gold is extremely bearish right now. So if you're buying gold, I would rethink that strategy because this right here is telling you that the market is going to push gold down. Everyone is selling it at this point. So the minute one, the minute five is going to be like, obviously your short-term trades. A lot of times, if the price is going to pull back, so let's just say, for example, in this case, we can see every single time frame has more sellers than buyers, with the exception of the minute one time frame. But even on the minute one time frame, you only have two buyers and one seller. So, that really isn't, a big deal. I'd be much more concerned with the other time frames, being that there's a huge difference. I mean, on the minute five, you have 70 sellers, one buyer. The minute 15, time frame, 276 sellers, 32 buyers. So if you're buying, most likely these buyers are going to get crushed when the market opens on Sunday. So if you look at this, and this is what's so kind of crazy. If you're just looking at this from the perspective of the candles, what do you see? You see, a low down here, you see a high down here, you see a higher low. You can kind of see there is like some resistance building right here. But for many retail traders, I can bet you $1 million that most retail traders are probably buying gold at this point because this kind of looks like an uptrend. And I'm gonna go to my trading view and I'm gonna go over a few strategies that most retail traders use. And you can see why so many retail traders get crushed by the markets. So this right here is gold. Let's take a look at the Euro US dollar. And you know what? This is one of the reasons why I can't stand trading the Euro US dollar, because it's so neutral. So you can see here that long term, it looks like the Euro US dollar is going to be bearish. But you do have some stubborn buyers that keep the price, very balanced. So because of that, the Euro US dollar has some weird movements. For the most part, it just it just consolidates. And anytime the US dollar is unstable, that means the Euro US dollar is always going to be unstable because people don't know what to do. But if you just look at the volumes here, long term, you know, it seems like people are very comfortable in selling and holding those positions for long periods of time. And you have over 88,000 sellers compared to 704 buyers. So, that should tell you something. And then, you can see here, the price or the Euro US dollar should fall because you have a significant amount of sellers. But then there's a problem because you have all of these buyers who are also holding their positions as well. So, it's just very hard to trade Euro US dollar. For me, I'm going to stay away from the Euro US dollar for these reasons. Now, I got to show you guys this because this is super awesome. If you're a fan of US 30, like me, this right here gives you the ultimate cheat code for US 30. Look at all the sellers for US 30. So for US 30, because it moves so much, look at the minute 1, the minute 5, minute 15, minute 30, the 1 hour. But more importantly, look at how many sellers there are. I mean, on the 1 hour time frame, you have 2,249 sellers against 36 buyers. So this right here is telling us that US 30 is going to have a massive drop. So if we see a couple time frames where maybe the buyers that have it, we know it's not going to be by much because it looks like any buyers that are coming in at this point are probably just coming in to trade like pullbacks, push the price up a little bit, and maybe they're doing some scalping or something like that. But buyers don't hold US 30 for long periods of time, or at least right now. So if there's any changes in the conditions, then we'll be able to spot it right here. All right, so let's jump over to my trading view real quick, just so we can kind of look at a few retail trading strategies and see and put things into perspective. All right, so let's look at gold for a second. All right, so if I'm trading this based off of the candles, or just what I see here, I use the stochastic momentum index for my oscillator to measure momentum. And we can see that the momentum kind of shot up pretty high. But we also know, based off of what I shared with you guys earlier, that this move right here is just a pullback. And that's what I love so much about this new indicator. The new indicator kind of like giving us the answers to a test, right? So if I was thinking about buying gold at this point, I already know that I'm trading a pullback. So a lot of times what we do as retail traders when we have areas where you have support and resistance is you create a consolidation box or a breakout box. And what you do is you put one line at the support zone and you put one line at the area of resistance. And then you wait for a breakout to determine if it's going to be an uptrend or a downtrend. Because we have the secret indicator telling us what's inside the candles, we already know that the majority of the banks and all the big money is selling gold. So we already know that the price is actually going to drop. So this resistance is valid, but this support isn't. So, if you're going to trade gold and you want to maybe do some scalping or something, basically make sure it's just a short-term trend or a short-term buy, maybe 10 or 20 pips. Don't hold a long position or buying position with gold unless you're selling. And I'm telling you, this right here is going to crush a lot of retail traders. So let's look at this in a different way. Another popular strategy is going to be with the break of structure, change of character pattern. So I like switching to a line chart when I use that strategy. And we can kind of see here, you had a low here, you had a high here, you had a low here, high. So this is a perfect break of structure pattern. And inside break of structure patterns, that basically means it's going to be a continuation of an uptrend. Now, if you are using break of structure and change of character, you can kind of see here that there was a change of character right at this line because the price broke below this lowest point. So usually what happens when you have a change of character is the price forms like a new low in this situation, and then you have a pullback. So what could happen is when the market opens on Sunday, maybe it drops back down to this support zone, and then it's going to shoot up probably somewhere around 2025, and then it's going to have this massive drop. So the cool thing about this is, you can still use whatever strategy you feel comfortable using. All right. Then go to your indicator and confirm it. Okay, is this valid? And as long as this is telling you what's the case, then okay, boom. I know it's a strong downtrend, even if it's a pullback, because there are a lot of times where you'll have some rogue buyers that really come in and try and push the price up. So that happens quite a bit. So this right here is kind of an example. So the British pound, US dollar, euro, US dollar, they're basically having the same kind of issues where uh, because the US dollar is unstable and the pound US dollar and the euro US dollar is very sensitive to what the US dollar is doing, then these currency pairs are going to be very difficult to trade. And to be honest with you, I recommend that you just stay away from them because you have US 30, you have gold, you have US dollar, Japanese yen. You have these other currency pairs that are so much more solid and easier to trade. So, I mean, look at the US dollar, Japanese yen. I mean, look at all the sellers. So, this is another situation where the US dollar, Japanese yen is going to have a massive drop. So let's just go to our trading view. Let's just do a quick analysis real quick and see what this looks like. Okay. So we have a deep break of structure or bearish break of structure continuation here. You guys can see this right here. You had a massive change of correct character. There really wasn't a pullback as of yet, or at least on the 30-minute time frame. Let's look at the 1 hour time frame. So, yeah, I mean, this is looking like a strong bearish continuation. And there's a million ways of looking at this. Let's look at the candles for a second. And this is why price action can be very tricky. So, for those of you guys who understand price action very well, what do all these long wicks look like? All right, so this looks like a strong demand zone, right? If you look at, so if we put like a line here, and then we'll just clone. So, from there is a strong demand zone, and then you also have uh, a lot of demand as well between those two lines. So, and you also have a strong support zone as well. So I'm telling you, a lot of retail traders are going to be looking at buying the US dollar Japanese yen. And we already know what's going to happen because we see that the big money is selling the US dollar Japanese yen. So on Sunday, if you're looking for an opportunity to sell the US dollar Japanese yen, I would just go ahead and put in a sell order at market, and we could be looking at a massive drop. And we can see that it's going to be long term because from the 1 minute to the 1 hour time frame, I mean, look at all the sellers in comparison to the buyers. So um, that's looking really good. It looks like long term though, the US dollar Japanese yen might be bullish, but if you trade this currency pair, you understand that even in a short period of time, this currency pair can easily move 100 to 300 pips. So there are tons of opportunities when you use this indicator. This indicator just basically tells you, hey, this is what's going to happen. So you can use this indicator to check your own trades. All right, so what I want to do now is just also just go into a couple common patterns with candles, and then I'm going to show you guys how to add this indicator onto your MetaTrader 4, and you'll be all set from there. So thanks for being here so far, and let's get into these candles. Okay, so let's start with some very basic candles that most of us are familiar with. In this example here, you have bearish spike candles and you have bullish spike candles. Now, if you use price action in your trading, you will know that in the bearish spike candles, the wicks above the bodies represents a supply zone, and the wicks below the bodies in the bullish spike candles represents a demand zone. So when you have candles with small bodies representing small volumes, it can vary a lot depending on the time frame. So if you see one of these candles on the 5 minute time frame compared to one of these candles on the daily time frame, the candle on the daily time frame can have thousands of buyers or sellers. And a lot of times, as traders, when we see candles like this, we are immediately looking for reversals. But if we knew what was inside the candles, we would know if it was just a pullback or a short-term trend continuation. So I definitely recommend that we start looking at what's inside the candles more so than the candles themselves. You can still be successful just by trading off the candles, but a lot of times, especially in the current conditions, it's just not going to be as reliable. And here's another example where you have um, candles with big bodies. So the wicks below the bodies of these green candles represent strong demand, and the bodies of the candles represent more buyers than sellers. The wick on the red candle represents strong supply, and the body of the candle represents more sellers than buyers. The problem here is we can't see by how many more buyers or sellers there are. Even the green candle in the middle with a big body, there might only be a difference of one or two more buyers than sellers. There's been so many times in my trading career where I saw a candle like the one in the middle, and I thought, wow, this is a huge, massive bullish candle, especially if I saw it like on the 1 hour time frame. But I never even thought about, wow, I wonder how many more buyers there are than sellers. And once I was able to see inside the candles, it was pretty shocking that sometimes, even if there's like a huge amount of traders, you might have, 500 buyers and 300 sellers. So the body is very big because there's just so many traders placing positions. But for us as traders, it really doesn't matter so much how many traders there are. What matters is the difference. If you have 1,000 buyers and you have, five sellers, that's a big difference compared to, 1,000 buyers and like 900 sellers. That's still very, very close. And if it's on like the 1 minute or 5 minute time frame, then and the rest of the time frames is like either bullish or bearish, then that's how you can kind of see, okay, you know what, for whatever reason, there's just a bunch of people pushing the price up for a short pullback, and long term, the trade is going to be bearish. So it's very important to understand that what's inside the candles, it really does make a huge difference. Because in this example right here, if you were trading this and you saw these two green candles, you would think, okay, wow, we're going to have a huge uptrend, and you would probably start buying. And then all of a sudden, this red candle comes up and you don't know, okay, wait a minute, is this going to be a pullback? Or is this a sign that the trend is going to reverse? So with us being able to see inside the candles, we can tell the difference and know, okay, wait a minute, that red candle was a pullback, no worries. The next candle is going to be green, and my trade is good to go. All right, so now let's jump into how to install this indicator on your Metatrader 4. Okay, so the first thing you're going to want to do is just go to like google.com or your search browser, and then you want to type in buyers versus sellers V3 indicator. All right, and then just press enter. And this is the easiest way to find it. And it should be the first link that pops up. So it's going to have like this indicatorspot.com. And then you simply click on this link. And let's see, after that link, after you press on the link, it opens. My computer is going slow, probably because I have too many things open, but it should pop up any second. Yeah, and also make sure that you're on the right page so that you don't check on any scams. So this right here is the full link. All right. And then all you have to do is just click on download, and it should download in just a second. So and then you have this. So you have this little pop-up if you're using Windows. Okay, so because I don't have a file or an application to open up zip folders, the way I open up zip folders is by right-clicking on my mouse And then I click on open with, and then I use Windows Explorer. And then you should have these, I guess these two files that pop up. All right. So then once you have done that, the next thing you want to do is you want to go to your MetaTrader 4. Okay, so once you have your MetaTrader 4 open, you should have the link that you just opened up from the zip folder. And then you're going to go to File, and then you're going to open your data folder. And when you open your data folder, I just move it over to the side. And then I like having the zip folder side by side, just like this. And then from here, we're going to open up the MQL4 folder. And then we are going to open the indicators of file. For those of you who use robots, you use the expert folder. But because this is not a robot and this is an indicator, then we use the indicators file. Once you have that open, then you simply drag the EX4 link or file over to the indicators tab or file, and then you will see it right here. And then once you see it right there, then you go ahead and close both of these. And then you're going to have to close your MetaTrader 4 and reopen it in order for the new indicator to show up. And then go to your navigator window, and you should see buyers versus sellers right there. And simply drag it onto the chart, and you're all set from there. So sometimes when you add it to a chart, you might only see one bar. If that happens, all you have to do is just click on a new time frame, and then it will add all the bars for you. So as long as you have this data window up here and the bars down here, then you have successfully downloaded the indicator and added it to your MetaTrader 4. All right, guys. Thank you for subscribing and following me. If you haven't, please like the video. And if you haven't subscribed, make sure you subscribe as well. I only share content if I think it's absolutely amazing. So you definitely want to make sure that you enable all notifications so you don't miss anything. I trade Forex pretty much every single day. So if there's any changes in the market, then I am very quick to adjust and let people know, hey, here are the changes in the market, and here's something that's new. And I strongly recommend that you make these adjustments so that you can keep being profitable and keep winning with Forex. So thank you for being here, everybody, and have a great day.